What's up, guys? Yes, in this video right here I'm going to show you guys how I trade exactly what I look for, how I enter, and things like that, where I would enter that, and things like that. All right, so let's just get straight on to it. Now, 3 confirmations, because you never really want to enter a trade off of just based off of 1 confirmation. Can you? Yes, you can. You can enter a trade off of 1 confirmation. You can. Is it riskier entering a trade off of 1 confirmation or 2 or 3 more confirmations? It's riskier to enter off of just 1 confirmation, but it can be done, and it can. All right, you can. But I use 3 different confirmations. I look for divergence, a reversal candlestick pattern, and support and resistance. Right, so the first thing you always want to do, you want to identify the trend. All right, that's the first thing you want to do, is identify the trend. But let's say we catch the right move at the right time before the trend even starts, right? So before all of this happens, right? Before all of this happens, let's say we catch the move at the beginning of the trend, which would be right about here. We catch this move from the bottom to the top. We catch it from the bottom to the top. Now, the way I trade is real simple. The only thing is, it requires a lot of patience and a lot of discipline to wait for a setup. All right, the reason why I look, now the way I trade could be used for multiple time frames. Right, this is not just strictly for the daily chart. This could be used for the H4. This could be used for the H1, the weekly, the monthly. I like the daily because the daily is a solid time frame. The higher time frames, you get less fake outs. You don't get faked out as much as you do on a smaller time frame because it doesn't move as much. All right, now remember, time frames, the different time frames, they're not telling you anything different. They're telling you the same information. It's just on a bigger time frames, it's in less detail. All right, so the smaller time frame is telling you the same information the bigger time frames is, except for the smaller time frames is telling you more detail. All right, it moves a lot more. I stick to the daily because it's kind of a solid time frame. And as y'all know, if you didn't know, every candlestick represents 1 day worth of data. All right, so this candle, let's say any candlestick, this candlestick right here was literally 1 day worth of data. All right, if you don't know this by now, the market closes 5 p.m. It will be 5 p.m. Eastern Standard Time, which is my time, Eastern Standard Time. You can convert that to your time, so you know exactly when the market closes, when the market opens. The market closes and opens the same time, 5 p.m. Eastern Standard Time, which is my time. All right. So the reason why I chose a daily time frame, I don't have to look at my chart as often. I only have to come look at my chart 1 time a day. That's it. I don't have to sit here and study my chart for hours. No, I just have to come back and look at my chart at 5 p.m. when a new candlestick opens. All right. This is just for now. Let's say if you look at the 4-hour chart. See the 4-hour chart? Each candlestick represents 4 hours of data. All right. So once the market opens at 5 p.m., the next candlestick won't be until 9 p.m. The candlestick after that won't be until 1 p.m. Well, actually 1 a.m. The candlestick after that won't open up until 5 a.m. and then so on and so on every 4 hours. You get it? All right. But once you kind of just understand the basics of when a market opens and closes, you can predict the opening of the next candle. So we know the market opens at 5 p.m. Eastern Standard Time, which is my time. Now we can convert that into your time so that way you know. Alright, so got that out the way. Now, like I was saying, let's say we catch the move before the trend. Alright, we catch it here. So we don't know what trend. I mean, we do know what trend is. This is definitely a downtrend. But let's say we caught it before this uptrend even happened. Alright, we looking for the reversal. Now remember guys, I talked about divergence. Divergence, regular divergence, is letting you know that there is some type of trend change about to happen. Whether we going from a downtrend to an uptrend, or a downtrend to a kind of the market starts to range, you know. Regular divergence lets us know some type of change in trend is about to happen. So, how would I have entered off this trade? After I spotted divergence, I would have looked and see if it was near some type of support area, which it was. But we have our support area here. Now, how I would have entered. After I would have identified the support area, now I'm waiting for a reversal candlestick to happen. As in my previous videos, speaking of reversal candlesticks, you have single reversal candlesticks, you have double, you have triple. All right. It all depends on. It all kind of depends on you. Single candlestick patterns, they come in handy, but I wouldn't say they're reliable. All right, they're kind of risky to enter right after one candlestick, and I don't feel like looking for an example because let's see. I don't really see one at the moment. Yeah, I don't really see one at the moment. But yeah, a single candlestick pattern, I wouldn't necessarily say it's reliable, okay? Because it can go in the opposite direction that you're really expecting. Like for an example here, all right? Here, we talk about the triples. In this case, this will be an evening star, right? We have our bullish candle, then we have the small body long wick, top at the bottom, and then we have a long bearish candle, which kind of it either covers half of the bullish candle or it engulfs, the whole candle. Makes it an evening star. Evening star is telling you what? Oh, price is going to drop. So now we're expecting price. Now we're going to enter here, expecting price to drop right away, which it didn't. It went to the upside. We'd have been a negative 300 pips if we would have took that trade. That would have been a big L. All right. That would have been a big L if we just entered off of that doji. This is also known as doji. If we just entered for a short after the doji. All right, so single candlesticks you will see it often a lot, but sometimes it's kind of best to wait for a nice setup, a double or triple candlestick pattern. In this case, we have our support here. See, now me normally, I want price to either touch a support or resistance area or come remarkably close. All right, I want it to either touch or come remarkably close. That lets me know that it just did not break that area at all. So it just kind of depends on your patience, on how long you want to wait, whatever the case may be. So my first entry would have probably been around here after this hammer, right? Because we have first of all divergence finished. We have our divergence, which would actually probably extend it. No? Yeah. How about divergence? Support. How to enter once this candlestick open. Alright. That may have been from here to here. It looks about 100 pips. Right? So we'd have been up 100 pips. Yeah. 118 pips. But I like that setup, so I would actually held the trade for a little bit longer. But anywho, I would enter there. My second entry would have probably been here. Why? Because we have now this candlestick actually came down and touched support. It actually came and touched our support, bounced off our support, and this is a bullish engulfing candle. So I'll enter here on this entry of this candle. Would have been a lot better. Would have been a better entry. Really, the no drawdown. All right, you have no type of pullback below your entry. That's probably been from our entry to that end of that bottom of that candlestick would have been maybe 30 pips tops, 30 to 40 pips. All right. Like I said, the way I trade is kind of usually gotta have the patience. All right, but let's say we didn't catch that. We didn't catch the beginning of the trend, right? So if you just open up your charts, the first thing you always want to do is identify the trend. That's number one always. You want to see if the market's ranging in a downtrend or an uptrend. So okay, we open up our charts, and what does an uptrend consist of? Remember, uptrend is making higher highs, higher lows. All right, that lets you know it's an uptrend. As we know here, we have our low down here, have our high, low, high. Okay, so we already know this is in an uptrend. We already know that. That's a clear uptrend. Price is in an uptrend. We know that. So now, when price is in an uptrend, we're always looking to buy when price come near a support area. All right, let me zoom back in a little bit. Slide. So we missed this move here. Price went up, touched resistance, came back down to a support. All right, now we already know price is in an uptrend, so now we're looking to buy here. We're looking for some type of confirmation to buy here. All right, again, two possible entries. You could have entered after this hammer, this reversal candlestick, this hammer. You could enter here, a little bit drawdown, and just let price do what it do. All right, or you could have entered after the bullish engulfing. After the bullish engulfing, price there pulled back a little bit, about 100 pips before actually going back in your favor. All right. See, now another thing we could have waited for is to see if we could get some, see if we could see or identify some bullish hidden divergence. In this case, we have that. We have price making, we have a low here, and then we have a higher low, while our RSI is making lower lows. So now we know we have bullish hidden divergence at a support area. All right, price has already came down to support. So now we're looking to buy once we get a reversal candlestick somewhere around here. We're looking to buy. We're looking to buy. We should not be looking to sell anything. We're looking to buy. Once our divergence complete, we are looking to buy. My entry would have probably been around here. After this inverted hammer, well, this triple candlestick setup, we got our bearish, little to no body, and we have our bullish candle. That's a morning star, guys. So after that, my entry would have been here, and as you can see, price just took off. All right, price just took off. Price took off. Okay, so now we have another break in resistance. Come back. We're looking to buy again near support. We're looking to buy again near support. Why? Because we're still in the uptrend. We should not be looking to sell anything in the uptrend. Again, guys, the trend is your friend. Never trade against the trend. Never trade against the trend. The trend is your friend. So we have a break in resistance. price going up, come back down to support, forms another reversal candlestick. This could be considered an inverted hammer, or you could look at this as a bullish engulfing. So you could have entered either here or here. Either way, price took off. And not only that, price then again formed more bullish hidden divergence. And again, price broke resistance, came back down to support. Another setup, guys, another setup. Your entry could have been here or up here and just let price move. After that, price broke another resistance, didn't necessarily come back down and touch support, so we're not looking for a trade setup anywhere in here. All right. Now we can see, and I also trade market structure patterns. So we see this, I see this. So now, me personally, I am predicting price is getting ready to make a head and shoulders pattern. After I see this left shoulder being formed, and then the head up here is being formed, and I see price kind of stall around the same area the left shoulder was made from, I am predicting price is making an inverted, not an inverted, but a regular head and shoulders, and I'm looking for shorts. But we didn't get any bearish divergence at the top. We didn't get any. But as we do know, now price is in a down move. Now price is in a downtrend from here. After this big up move, price became in this downtrend. Downtrend, lower highs, lower lows, which we have here. We have a high here, a lower high, lower high, lower high, low here, lower low, lower low, lower low. Price is in a downtrend, and you can easily draw trend lines to prove that. No need. So now, we didn't get any bearish divergence letting us know that price is going to reverse. You're not going to always get bullish or bearish regular divergence letting you know that the market's getting ready to change trends. All right. Sometimes you gotta wait and see if anything sets up. So price started to go down, started its down move. Now, once we already identified that it's in a down move, we're looking to sell at resistance level. All right, we're looking to sell at resistance level. At the same time, we're also looking to see if price forms some bearish hidden divergence along the way. So okay, so as we see here, it did form some bearish hidden divergence, and then we have price coming back to a resistance area. We're looking to sell right off the way. We're looking to sell. Which I actually did sell here, guys. I sold it right here at this resistance level, and I wrote it down to here. I think I got out of the market maybe somewhere around here, or maybe down here. But yes, we are actually sold this live trading. I think it was like I may have got out earlier than that, but I think it was like a maybe 200 pip drop. Yeah, I may have got out like maybe 250 pips. But now we know price is in a downtrend. We have identified a trend, which is a downtrend. Now we're looking to sell at a resistance level. We're looking for a reversal candlestick at a resistance level to sell, and we're also looking to see if price makes bearish hidden divergence, which it does. It makes the hidden divergence at the resistance level. We also have price come back, touch the resistance after it broke. Let's see, remember it broke support, came back, retested the resistance, dropped again. All right. And here we have bullish regular divergence at a support level. All right. Again, Regular divergence, letting you know there's going to be some type of change in trend. We don't know how far the change in trend will go, but we know that the trend is going to change. So we could have took this trade as well. After this inverted hammer right here, because price already came down, touched support, we see an inverted hammer close. Our entry would have been about here. Alright. And we could have rolled it up until the new resistance area, which would have been here, 200 pip catch. Or we could trail stop our profits and let the trade run for however how long. But yes, guys, that's exactly how I trade. I only use supportive resistance, a reversal candlestick pattern, and divergence. That's it, guys. That's just how simple I trade. I don't necessarily draw trend lines. I don't have a bunch of, and I also use some market pattern structures. I like inverted head and shoulders. I like head and shoulders. Them the two patterns I trade the most. Cause I can spot them. I spot them. I've trained my eyes to spot them with ease. But mainly, guys, I trade support and resistance, divergence, and the reversal candlesticks. We can actually look at a different pair and see the setups are the same. No matter what pairs you look at, the setups are the same. We coming off of a nice down move. Now we see, I wouldn't have necessarily took this trade. I mean, this could actually be an area of support. Let's see. Yes, this could be a nice area of support. So yes, I would have took this trade, guys. We have our bullish regular divergence, letting us know it's going to be a change in trend. We came from a downtrend, have our divergence at a support area, and all we're doing is now waiting for some type of reversal candle. In this case, our entry would have been up here, alright, because this was a nice bullish engulfing candle. This would have been your entry. A little bit of drawdown, but it took off. Not only that, it broke resistance, came back, touched support again. Oh, and guys, what is this? Are these tweezer bottoms? Are these tweezer bottoms? Are these tweezer bottoms? Been some nice entries. Been some nice entries, guys. Same thing here, same concept, guys. Like, again, the only thing with my trading is you need the patience and the discipline. But look at the pros. Look at the pippage. Look how many pips we looking to catch. Look at the move. If we was to catch this, even if we catch it, even if we entered here, the market pulled back maybe 40 pips. Maximum 1,400. We were looking to catch 1,400 pips, guys. Looking to catch 1,400 pips. Now, in this down move, I'm pretty sure we identified it as a downtrend. I'm pretty sure it's some hidden bearish divergence in here somewhere that we would enter. I didn't necessarily look for it, but I'm pretty sure it's in there somewhere. Let's see. Let's see if it is or not. And it is, guys. It is. Price was making a lower high, while our RSI is making higher highs. Hidden divergence, guys. So now we have a break in support. Price came back, completed the hidden divergence at a resistance level. After this bearish engulfing, we would have entered here. Just let the market drop, guys. Your take profit could have been that support area, or you could have just trailed it all the way down to ever how far. This is just how simple I trade, guys. You just have to have the patience to wait for a nice setup to happen. Again, we have bearish regular divergence here. Let us know there's going to be a change in trend. This was a nice little, this was a mini uptrend. And we have our bearish divergence, letting us know this trend's getting ready to change at a resistance level as well. So after that bearish engulfing, we could have entered and just let the market do what it does. Now, as we identified this was a downtrend, we could have been looking for some more hidden bearish divergence, found some more entries, just let the trade run, guys. No, it's everywhere, guys. It's everywhere. We just have to have the patience and wait for the right setup. Once we get the setup, we can take the trades. And it's very important that you mark up your charts when the market is closed. It's important that you go look at you go plot your support and resistance area when the market is closed. So you can prepare yourself for the week ahead. You can prepare yourself for the week ahead. That's why it's always good to mark up your chart when the market's closed, so you can prepare for next week. All right, you don't want to be caught. You don't want to be caught messing up. You don't want to be caught missing a setup that you could have potentially gained just because you didn't mark up your charts along the weekend, guys. But yes, guys, this is how I trade. If you still need some type of understanding after watching these videos, do not be afraid to contact me in the group. Let me know if I need to explain something better. Let me know, and I will definitely look to help you guys. All right.